Vincenzo'S Gold Crypto Investing, this daily cryptocurrency, blockchain technology, and XRP video that you've come to expect, love, need, and deserve on this January the 26th, 2025. And remember to support the channel. It is mandatory now. And this is the only thing that is mandatory. Like the page, subscribe to the page, and most importantly, share the page to help push us through and gain a better audience in that YouTube algorithm. Peace and love to, I always say to my beautiful audience, become members of Sage Brony Killer for just $2.99 a month, the cheapest and most and best value out there in the crypto sphere, bar none. And I implore you and I beg you and I dare you to find a better value. Also, you can super chat to support the channel, and along with the Jabroni Killer link in the video description and the pinned comment below, you can become, you can follow and trade with old Vincenzo. Not trade with me, but trade with the sites that I use. There is a Coinbase and a Robinhood link below, and I'll go over here in a few seconds and show you. I'll show it to you now. All the coins that you can trade on Robinhood. These are all the coins that are on Robinhood: Bitcoin, Bonk, Bitcoin Cash, Ethereum, Ethereum Classic, Stellar, XLM, XRP, Ripple, the Doge, Vincenzo, the fucking Doge. The Doge is there, everyone's favorite meme coin. Cardano is there, Solana, Shiba, Inu, Avalanche, Chainlink, Litecoin, Uniswap, Compound, AAV, Peep Coin, Trump's official Trump coin, and Dog Whiff Hat Coin, whatever that is. So those are all coins that you can trade with on Robinhood, and for the cheapest, the easiest, and most hassle-free way to trade crypto. And they do have crypto wallets on there. And we're going to start out this with XLM, and that's what we were looking at. We'll go into the full screen to make this easier. You can see where the moving averages are in the daily time frame. You're at about the 40 cents. The 34 cents and the 26.5 3/4 cent respectively from top to bottom for the 50, 100, and 200. And you can see these moving averages were moving straight up, and now they're starting to run parallel. And when they start to run parallel like that, that means you're in a consolidation zone, in an extreme consolidation zone. The volume in the daily time frame has tailed off to almost nothing, and that's what's been giving me some hesitance. And now you're well below, by several percent now, below the 43 cents. And something that's interesting that happened today, you can see you had a big fake out today. One local candle spike in a minute time frame, even though it shows up in the hour time frame, that essentially happened in a minute time frame. And you can see we spiked up from the wick of this candle body to the bottom 10.91% in the matter of a couple of minutes. And if we go into the minute time frame, you see that right there, all in the 1 minute candle, you spiked 11%. And it's just so happens orchestratively and facilitated by the criminal gangsters to give you a false, if people were watching the candle, the daily minute chart, to jump on board there thinking you were about to fly, eagle, fly high. For all my Philadelphia Eagle fans there making the Super Bowl, Dan, right? Super Bowl. They won against the Washington Redskins there earlier today in Philadelphia. But it got harshly rejected there at that 43 cents. And now in the daily time frame, you are below the 50-day moving average, and that's a critical thing. And you can see the 50-day moving average is right there at about 40.8 cents, and we're now below that. And what I'm looking at now, and I've told you, when you get back below that, you're short to medium term bearish, and we could be looking at a rundown here in the short term, all the way down to the 100-day moving average in blue, which from the current price would be another 13% decline, which would bring you into an area of a regional double bottom low where you hit that a few times back there in December, right? From about mid-December to late December, before you had that New Year's Day rally into the first of the year, the first week of the year, where you pumped from a swing low to a swing high of 59%. Now we're threatening to come back down and retest those lower levels. And if you do come back down to the 200-day moving average, down there at 26 cents, which is a big fall and would be a big correction from its swing high at 61 cents that would be a 58.15% correction, which is normal in the crypto sphere, but would be a pretty big fall down from anybody that was buying up in here that never bought before. But the 200-day moving average would, if it did come down there, would be a great accumulation zone, as the price would be cut in over half, and then the price from there would only be about, from its Trump Day rally to there, the price would only be up 193%, which is still a big gain, versus the 6x move that it made at the beginning of that rally. You'd rather buy it when it's only 2x up from its pre-pump versus 7x from its 6x from its pre-pump, right? So these are areas that we're watching critically, and obviously the 80 cents on any kind of big pump to the upside would be your major upper resistance, which is around and near, if not the old all-time high, and that's something that we're paying attention to. Hbar continues to consolidate in the daily time frame, and I believe this is up near its all-time high. It is. So it's having a big consolidation here on Hbar, right up at its old all-time high. It did briefly break an old all-time high, and now it's getting rejected by that. The volume has come down, but it is still elevated. And if you can get another pump, Hbar could go all the way up to $2. But if you start getting rejected, I would be looking at the moving averages as somewhere where you're likely to go down to. And if we did look at something else and bring in the VIX volume profile range here, from the beginning of this coin to the end, you can see you got your mean of the volume is way, way down here. Way down there. And we're going to lock that. And then you can see where you have this heavy resistance area up here where you're currently at. Another heavily resisted area right there, which is coinciding with the old all-time high, and we're going to lock that. And then there's not a lot of trading volume until you get to where these moving averages are. And we're going to put a horizontal ray right about there where some support and resistance starts to come back in, and we're going to make that blue. And if we go into the daily time frame, that's about right where the 200-day moving average is. So that's what I'd be watching out for right now on any kind of corrections to the downside. If this thing is to get harshly rejected, I'd be looking at the 200-day moving average down there at about $1 or 17.75 cents. And I'd be looking at the 100-day moving average as a very real possibility where this price could come down to. We'll make that blue, where this price could come down to in a correction. And from its swing high, the 200-day moving average would be a 55% correction, right? So those are areas that I'm watching. But if you can break and hold above this major resistance level of the old all-time high right here, and you breach out of that 38-cent level to the upside, the sky would be the limit, because it would be in price discovery, which could lead you all the way up there to $2.28. But that's for another day and another time and a different discussion. If we go look at DGB, you can see we're trying to pump to the upside, but right now we got rejected again in the daily time frame, what we were talking about yesterday by the, and you can see these moving averages are starting to trend down now, because the price has been trading sideways and somewhat down. The 50-day is trending down. The 100-day is parallel, and the 200-day is parallel. But you can see the last couple of days after we had this little rally there, we got rejected right there off the 50-day moving average in the daily time frame. And if we scroll in to the 2-hour time frame, you can see that even better. It got rejected right there beautifully. And this is the 50-day moving average, and it got rejected right there. And now we're trading down, and we're threatening to break the 200-day moving average, which is right here at about 1 cent. And if we break this 200-day moving average, we're very likely to come all the way down here to the mean of the whole volume of this coin, down there at 0.00841. And that would be your next level of major support. And from the current price, that is another 19% down. And if we look back at the daily time frame, something that would be quite similar would be the last time you got up here, you got rejected, and you came down 78%. So that's a pretty big fall before you bounce. And then if you come here and got rejected again, you can see how much of a fall this would be, that would be a 61, 62% fall. So that would be something that has happened to this coin in the past and something we're going to continue to pay attention to. The old Quant. Vincenzo, I want to hear about the fucking Quant. And the Quant is doing the same thing as DGB. It's struggling on these moving averages. And you can see the 200-day is sitting down here at about $95. If we clone, and then if we clone that again, the 50-day moving average is sitting at about $110. And the 100-day moving average is sitting there at about $103. No, we want to make that blue. About $103, right? And if we can continue to get rejected after we got rejected off this major resistance area at $1.24, you're likely to come down to the bottom part of this zone at $89, and then you could threaten to come on down even deeper, and that would be something that we'd have to pay attention for to see if we didn't even come all the way down into an area that's got your major support and resistance down here, all the way down there at about $68.62. So that's what we're watching on the bearish action out of this. You need to break above that $1.24 to continue to be bullish. Iota is doing the same thing. If we clone a couple of these, clone a couple of these, clone a couple of these, you can see Iota is almost in the same sort of a pattern. Come on, give that to me. The same sort of a pattern where we peaked out of a major resistance area just to get rejected. No, just to get rejected here. You can see what we're talking about. We peaked out of this major resistance area and robbed this red trading box, and it almost looks identical the same. Then you came right back into it, trading and getting rejected, and now it's looking like it's trying to get a forceful rejection to trade more bearish. The 200-day moving average, or the 100-day moving average is right there. And then the 50-day, or the 200-day moving average, excuse me, I got myself confused, is down there at about 24 cents. So that's what we're watching out for on a rejection. If you break the 200-day moving average at 24 cents, again, just like the other coin, you could be threatening to come down below this major support level, which is down here at about the 16 cents. If you want to get very bullish in the short term, you have to break back above up here, this 37 cents in yellow, right? But we keep getting rejected just like we are by the other coin we just talked about. Velo is in this rising wedge that we've been talking about for quite some time, and I've got some pushback on it, but it's a rising wedge because you're much wider at the beginning of the pattern, then you have uptrending upper resistance and uptrending lower support until they meet into a duck's beak right here where the price squeezes and the price has to break out. And we do know a rising wedge is a bullish continuation pattern, but a bearish reversal pattern. As it fulfills it, about 6.5 to 7 times out of 10, it'll break down. And if it breaks down, you break down to the underneath target, which would be where this pattern started all the way down here at about 0.02429 on a pattern breakdown. That would be your technical target. But right now we're still trading within this wedge, and we've just gotten rejected off of this 0.029879 right here. And your next area major underneath support, and what would be to continue what's been going on in this pattern, would be down here at 0.014549. And that's what I'm looking at, and that's what I'm following for in Velo on these daily updates. The DIA continues to break down, and this could be a head and shoulders topping reversal pattern. We've been watching two patterns. You can see left shoulder, head, right shoulder, neckline, and you go from the top to the neckline to the point of a breakout, and that's what gets you down here at about the 0.0338 cent level. And we continue to break down, and your next level that you're going to is going to be meeting what we were watching on our other pattern. If it was a bull flag, but it's looking like it's not a bull flag, you would be coming, come on, all the way down here to the top part of this red trading box of major support and resistance, but coming from it from above, it would be looking to hold it as major support down there at 0.50586. LCX is again doing the same thing. We broke out of what could be a bull flag. It looks like a bull flag, but it's starting to trade down. It got rejected up there near that 30 cents. And if we come back into this area, right about where the 200 or the 100-day moving average is in blue It coincides with about where the bottom part of this orange resistance box is. If we break this orange resistance box, we're likely to come all the way back down. If we break this right here, we're likely to come all the way back down here near that 14-cent level, and that's something that I'm paying attention for in the short term. If you wanted to break out and get very bullish, you would have to break out north of this 30 cents, top part of this orange trading box, and then continue up, but it's showing no signs in the short term of doing that. VTH, after its massive pump we were talking about the other day, this had a regional volume there. The 100-day moving average in blue, it's giving me some problems. But we looked at this and seen we had two big daily candlesticks in volume, and then it crashed. So that led us to believe the other day that this could be trading down, and we would be looking to trade back down into the moving averages. And from the wick high way up here, the 50-day moving average, get that out of there, the 50-day moving average would be a 70% fall. And at current price, we've come down 56.4%, and the volume is still showing no other signs of life, which means it was a big pump, and then it's going to come on down and deflate it all back into the moving averages, if not give it all back, unless we can see some more volume candlesticks in the daily time frame like that. So that's something that I'm watching out for in VTHO. And Monero. Monero is trading sideways. It's getting choppy, and I'd be looking either on an upside of 272, but more realistic, seeing where the market is right now. We could be coming down back into the moving averages, into the thick of them at the 100-day moving averages, where I'm calling for this to go next, which would be coming from up in here down into this $189 range is where I think that is going to be going in the short term. And XCN has been having a phenomenal pump, and you can see the volume. I don't know anything about this coin. It's been pumping up, and as long as this volume continues to pump up, the coin can sustain itself at higher levels. But if we get any kind of decline in the daily volume, which we're starting to see after a essentially 20x move in 2 weeks. Yeah, 20x move. It always makes me nervous. I could see a big fall down very quickly on a profit taking after that 20x move in 14 days down into the thick of the moving averages. And the thick of the moving averages would be here at the 200-day moving average, or the 100-day moving average in blue. But from the wick high to there would be an 88% fall. It would still be up big from its initial pump, but I could see this starting to exhaust itself out, reaching near an old all-time high after a massive pump. So I could see it come back down into the thick of the moving averages. I wouldn't chase this after a 20x move. You can if you want, but I wouldn't be doing it. And if you're in it already, just enjoy the pump and do whatever you feel is the best in your own personal decisions. Peace and love.